This is not financial advice. I'm recording my thoughts about Invitae, ticker symbol NVTA. The stock is currently trading at about $5.3 with a market cap of about $1.3 billion. Invitae is one of Cathie Wood's highest conviction stocks, but this company is losing money significantly and is diluting the shareholders significantly. Invitae is a medical genetics company that offers genetic testing in the fields of women's health and oncology, etc. But at the moment, almost 65% of their revenue comes from oncology department, but they're planning to expand their revenue base in women's health as well. The stock is down about 90% from its all-time highs, and this is because of multiple reasons. The first ever reason is the revenue deceleration. Initially, the company was saying that they can make about $1 billion of revenue in 2024, but at the moment it seems like an impossible task because in 2021 they grew their revenue at about 65%, and this year they're saying only $520 million of revenue. That only represents 13% revenue growth. So from 65% to 13%. So that's a huge revenue deceleration, and at the moment it seems like it's almost impossible to make that $1 billion in 2024, and I doubt if they grow at this rate, even in 2027, they will not make that $1 billion of revenue. The second reason is stock dilution. This company is diluting the shareholders significantly. For the past 3 years, the average stock dilution is more than 50%. That is terrible. The third reason is the company has about $737 million of cash left, but at the current burn rate, it can only last till end of next year. So they have to significantly dilute the shareholders again because they're not expected to make any profit anytime soon. So if there is further share dilution, that's going to hurt the shareholders. Because of these three reasons, the stock is down about 90% from its all-time highs, which is understandable. At the moment, the stock price is about $5 and I need to make an investment decision, right? At the moment, this company is losing tons of money, diluting shareholders. So that's like a big red signal to me, but maybe I will make money if I look at 5 years out, right? So I want to evaluate this company 5 years out to see if they will make money, because at the moment they are investing in research, and once they get that $1 billion of revenue in probably 2026 or 2025, they may make profit and significantly increase their valuation. For this purpose, I have looked into their gross margins, because if I look into the gross margins, I'll get an idea of net profit margins, right? Because market cap and future evaluation is based off of their future net income, and I assign a multiple to that net income to come with the market cap, right? So to get a net profit margin, so I wanted to look at that gross margins, and when I looked into their gross margins, they're in the order of 20%. 20% gross margin is extremely low. So if they make 20% gross margin, the net profit margin would be in the negatives, right? I'm not sure what they're doing to get this 20% gross margin. Are they giving the tests at a huge discount to increase sales? I'm not sure. This is the kind of company that everybody should stay away. Terrible gross margins, burning through cash, and diluting shareholders significantly. By the way, they also have about $1.5 billion of debt. If I'm a serious investor, I wouldn't even look into this stock. It's a waste of time. But if someone is gambling, this is a perfect stock because there could be a good short squeeze, right? Since I'm a serious investor, I wouldn't waste any more time on this stock. So I'm not going to be following this stock.